we don't look at, we're not buying the stock market. We're saying, I am buying, let's say American Express. We own American Express. There's 815 million shares out and sells it. This morning's 126 or something like that. So it's selling for roughly $100 billion. Now, the real question is whether the company's worth more or less than $100 billion. It isn't what the stock is going to do tomorrow or next week or next month.
The psychological fitness of a person is one of the most important prerequisites to start investing in stocks. And this is something that has also been regarded very important by Warren Buffett. What is the one element that lets them lag behind? What leads to these losses, and how important is it for you to learn about your psychological well-being with respect to investing in stocks?
Some people are not actually emotionally or psychologically fit to own stocks, but I think more of them would be if you get educated on what you're really buying, which is part of a business.
As the world's best regards the importance of psychological factors in any stock investment, it becomes very important for us to cover this in great detail and let all our viewers know the inherent meaning of these statements. So here we are in front of you with a very few essential points which you must consider before investing in 2022. Stay tuned till the very end to harvest all the profits. Hit the like button to keep us in profit as well, and also subscribe, share, and let us know in the comment section about your best strategy of investing. Now let's get started. Berkshire Hathaway, a dream company for investors, is not a new thing coming from Warren Buffett, that he creates something as strong as Berkshire Hathaway. If you look at it, one of the most important things that the company promotes is a peaceful investment without a lot of over-the-board investments. This strategic approach towards things and making an investment after days or months of planning is what lies at the backbone of all profits for Berkshire Hathaway. With 20% returns per year on an average, this company that was established in 1965 has come a long way today. This means that one may be able to gain double returns when we compare these rates to the S&P 500. If you know about Charlie Munger, you may also know that he's one of the most prudent investors on this planet. Together with Warren Buffett, he's been able to take Berkshire Hathaway to a great height. His work may be considered very remarkable and has helped Berkshire come a long way. He also holds the position of vice chairman for Berkshire Hathaway. According to him, one does not make money when you buy or sell. One makes money when they wait patiently. What does he have to say about analyzing the best venue for investment, and what does he think is the best way to analyze a particular stock? It's pretty simple if you look at it. However, consistency is the key to all the points we mention here on. The first one is to ensure that you understand the business, meaning thereby that one must understand the kind of business being conducted by a company you intend to invest in. Not understanding may lead you to miss out on certain important updates as you don't really understand, which lets you miss out on the profits or escape the loss on time. This is then followed by your ability to find out the competition in the market and to make sure that the competition that exists is durable and has some intrinsic characteristics. So the first few points, as you saw, are based entirely on the nature of business. Only once you're satisfied with the kind of business being pursued, start looking into the management behind it and the talent that they have. It may not be the wise option to rely only on the business and not the ones who make it a business. Assuming that all three categories are satisfactory to you, you make an investment. However, only after ensuring a margin of safety. This must be a value that makes sense with the initial price you bought the shares for. The market is volatile and you will certainly see ups and downs, so make sure you have enough safety margins and allow yourself to strap into the ride. Now you may ask yourself about the efficiency of these principles. The answer lies in the initial part of the video when we mentioned the average returns being generated by Berkshire Hathaway. Yes, these are exact methods that the company uses to make investments. Sounds too simple, doesn't it? This is exactly why we didn't see it spread enough. The world has become too complex these days, and the easier way out of the problem is often unnoticed. Berkshire has this ability to stick with the easy methods and make the most out of these methods. If it is working for them with due work and good research, you're next in line. Apart from these points, which sound pretty general and are not custom-made for the year 2022, certain other factors need to be taken into consideration. The volatility has increased these days. Markets are overvalued. There was a pandemic and set things to low bars, and things haven't really been all good and jolly. As a result, it will be very natural if we have to go through inflations and higher interest rates. What we need to do is factor these things in while making an investment. One of the key investment strategies that he and his company deployed at times like this, when the prices are so high, is to buy entire companies. You'll see why in the further parts of this video. There is a significant need to use up the money and make the investment while the market is in such states. This has not led to Warren burning all of his money. Instead of committing a cardinal sin of buying overvalued stocks, he's been able to accumulate these from a total of $84.3 billion in Q3 of 2016 to $149.2 billion in Q3 of 2021. This was one, but there are more to follow this year. The second best way is to ensure that you invest on a daily basis. Now, the term daily does not mean each day, but on regular intervals.
So I would pick a broad index, but I wouldn't toss a chunk in at any one time. I would do it over a period of time, because the very nature of index funds is that you are saying, I think America's business is going to do reasonably well over a long period of time, but I don't know enough to pick the winners, and I don't know enough to pick the winning times. There's nothing wrong with that. I don't know enough to pick the winning times. Occasionally I think I know enough to pick a winner, but not very often. And I certainly can't pick winners by going down through the whole list and saying this is a winner and this isn't, and so on. So the important thing to do, if you have an overall feeling that business is a reasonable place to have your money over a long period of time, is to invest over a long period of time and not make any bet implicitly by putting a big chunk in at a given time.
So one thing that you learn from this video is to ensure that you take things very slow and have faith in the cost averaging system that the market has. In case you are a passive investor, the question whether the market is low or high is not something that really affects you. For you, it's about whether or not you have a good feeling about this business and you're speaking about it in a long term. And this need not be correct, as you say. However, as time passes, you will realize the direction in which you're going, and you will always have the time to minimize the losses you may occur. Following this method requires you to look at the short-term vision and not the narrow down on the profits you make at a shorter term. So this means that for a passive investor, small losses must not be a problem, as their vision will be for a much longer term than where they are. And then what? What do you do once you have made an investment? What are the other imperatives you need to factor in? Well, we understand these concerns, and these are a few of the important questions in economics, as Warren himself stated. Looking at what next is an important aspect while you factor in the inflation rates, which took off in May 2021. So in the times of inflation, as you know, there is a general tendency to see variations in prices of commodities. Warren stated that as far as an investor is considered, while booking into the kind of business the business does, an investor may profit out of a business which cannot just alter prices of its goods or services every now and then. This will help them remain over the water level and not sink into inflation as time passes. This will also reduce volatility and hence a much peaceful sleep at night. So the effect of 2022 on the markets has been high. One needs to be extra vigilant to ensure that he never misses out on certain updates. Train your mind, work progressively, and don't let the setbacks hinder you. Keep investing in the best possible manner, keep your vision set and locked in for the long period, and we will meet you with yet another wonderful video next time.